Hi there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. I've got my coffee. Hope you guys are doing fantastic. Holy cow, interest rates are amazing. So I'm going to let you know what happened with economic data here, and then what I believe might happen in the months to come and what you can expect from that and what you can tell your clients. So here's what happened in terms of economic data. So we saw the Case-Shiller index come out this week, and it did show an increase of 1.2%, which on the 20-city composite index, and that's the sixth consecutive increase that we've seen. So we are showing some good data from the overall housing market. Consumer confidence came in a little bit higher than expected. We also saw the second quarter GDP come out, and that showed some pretty anemic growth. It only showed growth of about 1.2%, which is not really that great. And it was kind of in line with expectations, but that's not really great numbers from the GDP. And there was also a revision downward of 0.4%. New home sales came in at 373,000 units. That's a little bit lower than the 380,000 units expected. We did see durable goods post just a stinker. It was down 13.2% for durable goods orders, so that showed some real weakness in the economy. And pending home sales, that was a little bit lower than expected. That showed a negative increase of 2.6%. And today we saw the PCE come out, and that is the personal consumption expenditures, and that's the Fed's favorite gauge on inflation, and that only showed an increase of 0.1%, so that shows that inflation is still really mild, which is great for interest rates and under control. So, as you know, and you've heard all over the news, interest rates are amazing. We had 4 days of setting the all-time record of where the mortgage-backed security price is, and that means that the yield is down, so that means interest rates are down. So there was 4 consecutive days that happened: Friday of last week, Monday, Tuesday, and Wednesday. Thursday there was actually a little bit of weakness, and so far on Friday a little bit of weakness today, but they're still amazing. So that's really good. But even though we're seeing a trend in rates coming down, I'm really still advising my clients to lock and to take the money and run. Here's why, and remember to explain this to clients, because you might hear them say, well, the Fed is going to lower interest rates and they're going to keep interest rates low. Well, what the Fed is trying to do with buying mortgage-backed securities and injecting money into the economy is they want to stimulate inflation. They're actually trying to inflate the economy, and that is bad for interest rates over the long term. So one day this coin's going to flip, and their efforts are going to be good and going to show some fruit, and that's going to cause interest rates to rise. So with rates at these levels, I'm advising clients, take the money and run. Because we are fighting the Fed here. They're trying to increase inflation, which causes interest rates to go up. But I don't think that's going to happen for the long term, or in the short term, really. In the long term, it will happen. But over the next couple of months, I mean, we're still fighting weak economic data in the United States here, and also there's still things brewing with Spain and Greece. So they're still, a bug in search of a windshield. Also, Italy. But it's expected from some of the economists that I'm following that maybe nothing's going to be announced until after the election. The election is only 30 days away, or a little bit over that. That might also cause interest rates to get a little bit worse after the election happens, because what we see, regardless of who's elected, that's kind of a burst to the economy, because business owners now know who the administration is, and they can make those plans and begin injecting money back into the economy. And whoever wins the election, there's going to be half the people who are pretty happy about that, and so confidence goes up. And again, everybody knows the plan. Right now, no one knows what's going to happen in 5 weeks. But in 5 weeks, we'll know who the next president is, and everybody starts making plans for that and knows how to adjust. So again, I'm advising clients to lock. So that's what's going on with interest rates this week. Take advantage of these really low rates. Make sure you're calling your clients and letting them know now's a great time to buy a house or to refinance, but really jump on this. And if you have any questions, give me a call. Oh, and next week I'm going to be showing you some data that you can show your clients that shows that we're approaching the season that is the best time to buy a house according to the numbers. So hope you're having look for next week's Java with Jared on that. Hope you're having a great week, Give us a call if you have any questions, and we'll talk to you soon. Thanks for joining me with Java with Jared. Bye-bye.